What's up guys, this is Nick with another video on how to improve your trading. Today I'm going to look at how you can start to think more in probabilities. This is super important for trading. At the end of the day, every trade we take has got a chance of winning, a chance of losing, and when you begin to understand the probabilities of your own edge better, you can accept taking the loss. You can just let a trade play out a lot easier because you know that a loss could happen, a win could happen, and all you do is click the button. This was one of the key factors in me becoming a successful trader. I really got into understanding what my edge really looked like, how often I should expect a winner, how often I should expect a loser, the likelihood of taking a drawdown over a certain amount, the larger drawdowns that I can take. And what that means is that for me personally, if I go through a period of drawdown, so long as that drawdown is smaller than the maximum expected, then I know that we're probably doing just fine. So to start off with, why is it important for your trading? You will not win every trade. Okay, that's a given. It doesn't matter what strategy you trade, you will not win every single trade. And because of that, we need to understand that there's going to be a win percentage and there's going to be a loss percentage. And a lot of people will take a trade and just say, right, they'll look at the potential profit, right? They'll go, right, I'm going in long here, I'm going to get out up here, I'm going to try to make this amount. And sometimes they'll not even think about the loss. I know that a lot of really top level traders say that they think first of their risk. I don't think that this is necessarily exclusive to looking at the chart and going, I'm going to risk to this level and make sure that that is a certain percentage of their account, etc. I think it also extends to the fact of they go, I understand that there is a dollar amount that I potentially could lose here and that there is a chance that that happens. However, if you put it into a formula of it's going to win X percentage, lose X percentage, it's going to come out profitable overall. So they understand the risk. They understand that by taking that trade and assigning that amount of risk to it, they are overall making a profitable decision. Ignoring the probabilities can actually very negatively affect your trading psychology. You're going to find that if you're constantly just looking at the win, when you have a loss, it hits you pretty hard. You end up potentially going and making more, you end up going and making a mistake because you've taken a loss. How many times have you taken a trade which you know was correct? It's ended up being a loss. You get frustrated at it, you get maybe annoyed at yourself for taking a trade even though you know it was right, and as a result you end up taking a bad trade. Or you take a trade that is part of a profitable strategy, it loses, and you decide, maybe you have a week where the strategy doesn't play out all that well, and as a result you decide, I'm going to find another edge. And the reality is, if you'd have just kept trading that same strategy accurately, you'd be very profitable right now. But because you could not accept or didn't really work on accepting the losses, you moved on to something else and something else and something else. It also allows you to see the market clearly and reduces your bias. If you go into a trade and you can only see the long side, you can't accept that this could actually go against you. Whereas if you look at every trade and go, there's a chance that this goes in my favor, there's a chance it doesn't, then that bias of I can only see the market going higher begins to drain away, because you know that, hey, you know what, there's a 60% chance this does go in my favor, there's a 40% chance this starts actually going in the opposite direction. And that could then lead to a much longer term move in that opposite direction. So it just helps you kind of see the market for what it is. And as I said, it prevents you from spiraling during a normal drawdown. I recently had a drawdown in my own strategy of around about 14R. And I began looking into data and realized that in a larger sample size, there's probably around about there's a pretty good chance I'll have a drawdown significantly larger than that. When I saw that, it made me go, okay, the strategy isn't broken, it is just going to have these drawdowns. So the first thing we're going to look at is understanding win percentage and a loss percentage. And a lot of you will probably go, well, of course I know that my trade can win and can lose, obviously. But that doesn't necessarily mean that you live by that knowledge. Your strategy doesn't predict what will happen, right? It doesn't straight away tell you if you get in here, it's going to go higher, or this is the bottom and we're going to go to the top. Your strategy is essentially telling you that what is happening in the market, there is an X percentage chance it goes higher by this amount and an X percentage chance it will go lower by this amount. The way I look at it is there is, say, a 50% chance that it will go 2.5 times my risk and a 50% chance it goes to 1 times my risk, for example. So all your strategy does is tell you when you have an edge. It doesn't predict whether the market's going to go in a direction or not. It's just going to tell you there's a higher chance that the market is going to go in one direction before it goes in the other direction. This means that your strategy will have a win percentage. For most traders, this win percentage will not be that high. And this is the thing that gets a lot of people. Most strategies probably have a win percentage of between 40 and 60%. That means that your strategy will have a loss percentage of between 60 and 40%. My own personal strategy wins in the ballpark of 55%. And I wouldn't be surprised if over time it comes down to like 50%. That means that half the time I can execute my trade perfectly and take a loss. And that also means that you can go on quite long periods of losing. Understanding this, being able to see actually there's a 60% chance that the trade I've just taken is a loss, and that's fine because it's still part of a profitable edge, is really important. So long as your risk reward combined with the win percentage you have gives you a profitable edge, you take that trade. What a lot of people end up doing, and it's going to be a complete different video, is they cut their winners a little bit. This ruins their risk reward, which means their win percentage stays about the same at that 50%, but instead of trading at a 1.5 or 2 to 1, they end up taking a 1 to 1 and go nowhere. You have to be able to see that for you to have a profitable trade, it isn't about making profit on it. It's about letting the trade hit a certain profit target that will allow your risk reward to be high enough to be combined with your win percentage to have a profitable edge. When you know that you're going to lose, say 50%, you're not going to be as disappointed as a loss because you know it's still part of a profitable edge. And staying with that kind of idea, why do you right now, like a lot of people will say when they take a loss, they get upset, they get frustrated. Why are you upset if you know it's going to work, if it's going to lose 50% of the time? If you are told that there's a 50% chance of rain, when it does rain, you'll go, oh yeah, no, I was told that there was a good chance this would happen. And you don't get upset about it. Maybe you really like the rain, so in that case where it doesn't rain, you'll be, well, I knew there was a 50% chance it wasn't going to rain. This is the same with trading, and it might be a good exercise to kind of tell yourself when you take a trade, this is just like a weather forecast. There's a 50% chance of a loss. There's 50% chance of rain. If it does rain, don't be disappointed because you were told it could do. So instead, you need to shift your mindset from the result of a trade to focus on execution and accuracy. And this is the thing that I bang on about all of the time, that you need to change your mindset from, is this going to be a winner, to, did I execute it well? Understanding that trades will win and lose at different percentages, at 50% win, 50% loss, for example, allows you to go, okay, there's a good chance that this could be a loss. There's also a good chance it will be a winner. All I can really do, I can't control the outcome now. All I can do is control how will I execute, how accurate I can be. If every trade that I take is in line with my strategy, I follow my strategy, then it's a good trade. And you can work out pretty easily how much your expected return per trade will be. If you backtest your edge, or you have 100 trades of your edge and the return is 100R, then you know that every single trade that you take has an expected return of 1R. Whether it's a loser or a winner, as long as it's part of your strategy, you have made 1R by executing accurately. It's really important to try and understand the long term with probabilities. If, for example, you sort of take a step back and you go, the next 50 trades you take are perfectly in line with your strategy, where will you be? This is a really cool exercise that I will do sometimes, and you've got to be careful not to start dreaming about, your potential. The maybe I can make $1 million or whatever. But look at your edge and go, okay, take the last 50 trades of that edge, or the average return of 50 trades, and go, you know what? If I execute very accurately over the next 50 trades, on average, my strategy has returned 40R over that period. So if I execute my strategy accurately, I can expect to make 40R. If 1R is $100 and you get, say, 25 trades a day, a month, in the next 2 months you would expect to make $4,000, so long as you execute your strategy perfectly. For a lot of people out there, they wouldn't have ever had 50 trades that are anywhere close to perfect. They're probably trading like 10 or 20. When you begin to see this, you begin to kind of say, okay, I'm on the slow path, if you like, of just execute the trade. The thing that I really, like to look at is what can you do right now to make those next 50 trades more likely to be perfect. And you will always come to the conclusion that, well, I just need to make sure that I'm executing the next trade as accurately as I can. And then the next trade. The whole idea of one good trade, which is a nice idea, comes from this, right? If it's just one good trade, you execute well for 50 trades, that will accumulate to be plus 40R, plus 30R, plus 60R, whatever it will be. Looking at one trade in that set, well, it could be a winner or it could be a loser. If it's a loser, that doesn't mean anything. It's part of a 50 trade sample that made 40R, 50R, whatever it may be. And a good idea as well is to say, okay, in those next 50 trades, you trade them perfectly. How many losses are you expecting to actually take? Because if you have a win percentage of 50%, in the next 50 trades, you're expecting to have 25 losers. 25 losers. How many of you have sort of like thought about their future and thought, well, I'm going to have a bunch of losses in here? It's probably not very many of you will actually think like that. So the way you really want to try to approach it is, this trade gives me an edge, not a win. I understand there's a loss, and there's a chance for a loss and a chance for a win. Overall, that gives me an edge. One cool thing that I did not that long ago was create a model for my results. I'll show what that looks like. I might, in a future video, show how to create that if people want me to. It will give you an idea of the different outcomes in the short term, as well as gives you an idea of the potential drawdowns, and shows how even with those drawdowns you will come out profitable. So if I just bring over my model real quick here, I've essentially taken my edge. This is the data. Like I said, I may show this in the future, how to make this. And I've essentially put in my win percentage and the different outcomes that are possible. Ran it 3,000 random times and come up with this current set of results. And I'll keep on changing this, and you'll see. And you can see that over those 3,000 trades on this run, it made a profit of 3,900R. And it had a drawdown of, what's this, 17.2R, another drawdown of 15R, another drawdown of 15R, another one of 15R. And many of these other drawdowns where it has 10. In fact, it has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 drawdowns of 10R or more. And this, I think, is one of the better runs, actually. You can see here that the 10 trade average, there are 16 runs in 3,000 trades. So not a very large percentage. The edge I have is particularly big, I can't lie, and that's one of the reasons why my funded account, I go very aggressive. But there are still many runs where I'm losing a significant amount. If we just refresh this real quick, we can see that in this run, okay, we've taken the same number of trades, we're up 3,500, and this one had again 16-hour drawdown. It has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 periods where it has a 10-hour drawdown. And this period in particular here, there would have been no progress. Go down 12-hour, make it back, lose it all again, make it back, lose most of it again. That's to go from the start of this, right? I have no idea what point this would be. So point 2400 roughly. So from 2400 through to 2470, there's probably very, very little profit in that period. There's a 70 trade period where there's like pretty much no profit at all. That's within the realms of possibility. You can kind of see here, this is the average distribution plot, and you're only talking about a couple of I've forgotten the word now, a couple of standard deviations away from the mean, and you lose 10R from in 10 trades. You can actually see here that on this one there were 37 runs that broke even or worse. That's around about 10%, I believe, of all of my trades. There's a 10% chance that I go on a losing period over 10 trades. And you can run this as many times and just see how the numbers differ. This looks like a pretty good run. I believe that at the moment the numbers are set up to be fairly safe. I can go slightly more aggressive with these numbers as well. But you can see here, I have a drawdown of 23.4R in a strategy that made, 3,300 in 3,000 trades. That has a return of over 1R per trade, and there's a drawdown of 23R. If I didn't know this, and in a month's time I go on a drawdown of 18R, I'm immediately going to go to the strategy doesn't work anymore. I shouldn't be trading it. But now I can see, okay, you know what? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There's 13 different runs of this where I lose more than 10R. So if I do go through a 10R drawdown, well, I know that's probably going to happen maybe once every 100 or so trades. I'll run once more to just show how the, and this one here, this was a horrible run, and this is just as likely to happen as any of the others. This one, there's 49 runs where my strategy makes 4R or less in 10 trades. And again, look how many relatively large drawdowns it has. It has plenty of them. And guess what? At the end of it, despite those numbers looking worse, it made about 1.2R again per trade. Understanding this, seeing that like this period here, for example, from 0.8, where we're at about 820 to 0.870, so a 50 trade period, it broke even. There are lots of break even periods in here of around 40, 50 trades. That can happen. Understanding that and knowing it's a possibility will prevent you from overreacting to one of these events. I think when I ran this through about 50 times, the average largest drawdown was over 20. Like I said, I think this is relatively safe numbers I've got up here, but when I ran it on my full strategy, quite often there was a 25R drawdown, which is pretty crazy to see. So having that model allows you just to see what is possible, and it allows you to accept those not so good times. So how do you actually change your mindset? And this is the big thing here, because so far all I've done is talk about like why it's important and a lot of stuff that you go, yeah, I know that. This is the bit where if you've got through to this point in the video, you get the value. When you have a losing trade and react badly to it, so you take a loss and you go, I can't believe I've taken this loss again, my strategy doesn't work, the market's broken, whatever it may be, or when you're worried about taking a loss, try to write down and track the exact train of thought. Find out what and why you are upset or frustrated at. Some people, it's a case of they see winning as being correct. It's a subject that came up many times with the students I've coached. They go, well, if I have a winning trade, then I was right. If I take a losing trade, then I was wrong. So I've got to find out why I was wrong. Well, that's pretty simple. Did you put on the trade correctly? Yes, then you were right. But the result doesn't show that, right? Or it could just be a case of you're worried of losing a certain amount of money. You've got to find out what it is. And what you have to then do is catch yourself every time that this particular thought process comes up. So even if it's just a small version of it, right? You haven't even got into a trade yet, and you have that twinge of, well, what if I take a loss? It's 10% of what it normally is. Every time you catch it. And when it does, you need to have a strong piece of logic to replace that thought. This is Jared Tendler's method that he uses in the mental game of trading. Very, very powerful. And you need to have this written down ready. And I've put a few examples, but don't just use my exact words here. Come up with one that really resonates with you. I like to have, I like to create like 10 or 15 of these in my mind. And then the one that really stands out and goes, that makes complete sense, go with that. Because you need to live by it. You need to, when you read it out, not just go, oh yeah, you need to go, that is actually my belief. It makes complete sense and I understand it, and that is who I am, essentially. So a couple examples is, I know that there's an X% chance, so let's say 50%, there's a 50% chance I lose, but that doesn't mean overall that this isn't a profitable trade. Another example might be, I make long-term profit by executing accurately. Doing this will mean I have 50% losers. Or it could be that I know a drawdown of 25R is possible and exists within a very profitable strategy. And you'll want to expand on these and go, well, I know that a drawdown 25R is possible and exists. So therefore, if I take a loss, then it's fine. It's still part of a profitable strategy. Essentially, what you want to do is when that negative thought process shows up, you want to have something to replace it with that allows you to execute accurately. It always comes back to that. You want to have something that encourages accurate execution, consistent execution, and high performance. So it's important to repeat this every time you catch one of those negative thought trains until this becomes your natural response. Try to do some of the things that I've shown in this video just to understand what your edge looks like, the win percentage, the loss percentage, the risk reward. Do things that will make you see the edge that you have clearly, rather than I want to take a trade because it could be a winner. When you understand what your edge looks like and you understand that all I have to do is execute it accurately again and again and again, then in the long run you'll have amazing results. Now 3,000 trades, I'll bring this up real quick again. For me, I get around about 40 trades a month. I am, this is probably 8 years worth of data. I'm not going to, the likelihood that my edge lasts exactly in the form it is for 8 years is pretty much zero. But I know that over the course of a year, 400 trades, well, that does look actually like it's going to be around about 400R. So if I execute day after day accurately, if I don't get a trade, I don't take it, then I understand that good execution over the long run, despite having those drawdowns, there will be profit at the end of it of 400R. So that's going to be it for me today. I hope you enjoyed learning something new. Check out the other videos. Make sure to like and subscribe if you find this useful, and I'll see you again in another video. Thanks for watching till the end of the video. Just adding a quick piece in here to let you know what extra services I have to help you become a better trader. On my site, guidedtradingmeditations.com, you can find my new course, The Trading Blueprint, which gives you a full guide on how to create an edge, test it, start trading it, and scale up. There are sections included on how to find weaknesses in your trading and then how to resolve them, as well as many other bits of information that I've gathered in my years of experience. The aim of the course is to make you a fully independent trader, so you don't need to pay ever-growing monthly fees to be in a chat room. There's no specific edge needed. You can use this in any market with any trading style. If you're at a stage in your trading where you're struggling and would prefer a more in-depth look at your own personal weaknesses and ongoing support, you can also book one-on-one coaching with me on the site. There's a cool breakdown on the screen right now, so pause the video and read through it, and if it's something you're interested in, check it out. There's a ton of other content on the site that I'm really proud of and I've really enjoyed making, so if you're interested, please check it out. I'm sure there'll be something on there that can help your trading. You can reach me on Twitter. My handle is in the description down below. You You can send me a DM if you'd like any more information, and make sure to like and subscribe to stay up to date with future videos.